TickerWatch news for Alphabet, Week 4 of 2026. Could Alphabet be on its way to a $400 share price? That is the big question circulating Wall Street this week. While one major firm just issued a strong buy rating with that exact target, claiming Google's AI stack is driving a new cycle of growth, the company also faced a significant legal setback in federal court regarding its search monopoly. It has been a week of aggressive expansion in autonomous driving and AI partnerships balanced against looming regulatory battles. Is the market focusing on the growth or the risk? Let's get into the details. Welcome to TickerWatch News for Alphabet, Week 4 of 2026. In this episode, we are breaking down the news, data, and developments surrounding Alphabet Inc., tickers GOOG and GOOGL, for the week ending January 23, 2026. Please remember that this podcast is for educational purposes only. Nothing heard here should be considered financial advice. All investment decisions involve risk, and you should conduct your own research or consult a certified financial professional before making any moves in the market. Let's start with a look at the numbers. It has been a generally positive week for Alphabet shareholders. As of early trading on Friday, January 23rd, the stock has seen upward momentum, largely fueled by analyst upgrades. Following a bullish note from Raymond James on Thursday, shares of GOOGL popped approximately 1.5%, trading around the $332 mark. This move comes after Alphabet hit a market capitalization milestone earlier this month, touching $4 trillion. The broader context here shows significant strength. Over the last 12 months, shares have soared roughly 65%, significantly outperforming the broader tech sector and the Magnificent 7 ETF, which is up about 17% in the same period. Now let's unpack the major stories driving the narrative this week. We have 4 key developments to cover, ranging from autonomous vehicles to legal battles and strategic AI investments. First up, Waymo expands to Miami. Alphabet's autonomous driving unit, Waymo, officially launched its robotaxi service in Miami this week. The service is initially covering a 60-square-mile area, including neighborhoods like Winewood in Coral Gables. The company confirmed that nearly 10,000 residents have already signed up for the waitlist. This expansion follows a record year in 2025, where Waymo provided more than 14 million trips. This puts Waymo in direct contrast with Tesla. While Tesla CEO Elon Musk posted a video this week claiming Tesla has started unsupervised robotaxis in Austin, Waymo is currently operating Level 4 autonomous service in multiple major markets. Tesla's full self-driving system is still classified as Level 2, requiring driver supervision, though the competition is clearly heating up. Second, deepening AI investments and partnerships. Google is aggressively bolstering its AI capabilities through external deals. Reports from January 23rd indicate that Google has invested in the Japanese startup Sakana AI. This move is designed to accelerate the performance of the Gemini chatbot in Japan, a market keen on adopting artificial intelligence. Sakana's CEO noted that the investment grants them access to Google's foundation models. In a separate deal reported on January 22nd, Google DeepMind signed a licensing agreement with Hume AI, a startup focused on voice and emotion AI. As part of this arrangement, DeepMind is hiring the Hume CEO and several top engineers. This suggests Google is looking to integrate more empathetic and voice-responsive features into its own models. Third, the Apple connection. There is interesting news regarding the relationship between Google and Apple. Bloomberg reported this week that Apple is working on an internal AI chatbot, codenamed Campos, expected to release later this year. While Apple is designing this to eventually run on its own infrastructure, reports suggest they might lean on Google servers to host and run the chatbot initially. Apple is already reportedly paying Google about $1 billion annually for access to AI models. This highlights how entrenched Google's infrastructure is, even among its fiercest hardware competitors. Finally, antitrust litigation. On the regulatory front, a federal judge in California ruled on Wednesday that a consumer antitrust lawsuit against Google can proceed. The lawsuit alleges that Google unlawfully stifled competition by paying billions to make its search engine the default on devices from Apple, Samsung, and others. The plaintiffs argue that these default settings prevented rivals from gaining the scale and data needed to compete. The judge rejected Google's request to dismiss the core claims, meaning the company will have to face these allegations in court. Moving on to how the market and analysts are reacting to this news. The sentiment from Wall Street this week has been overwhelmingly bullish, particularly regarding the company's AI stack. On Thursday, Raymond James upgraded Alphabet from outperform to strong buy and raised their price targets significantly from $315 to $400. Their analysts argue that Google is entering a cycle of revenue acceleration driven by the integration of Gemini models, cloud, and workspace apps. Other firms are also adjusting their expectations upward. Truist Securities reiterated a buy rating with a $350 target, citing robust search momentum and a solid cloud backlog. Wells Fargo and TD Cowen also raised their targets to $350 and $355 respectively. The prevailing narrative among these analysts is that despite the rise of generative AI competitors, Google Search is holding its ground. TD Cowen noted that their ad buyer surveys show Google Search still delivers the highest return on investment among digital platforms. Let's take a quick look at the fundamentals and technicals. Fundamentally, the focus right now is on valuation relative to growth. Raymond James values the stock at 29 times estimated 2027 earnings. While this is a premium compared to historical averages, they believe it is justified by the expected acceleration in revenue. Specifically, they forecast cloud revenue to grow 44% in 2026. We're also looking at massive capital expenditure. Reports indicate Google's CapEx could reach $93 billion this year as they build out data centers to support this AI demand. However, the company has a massive cloud backlog of $155 billion, which helps justify the spend. Technically, according to analysis from Seeking Alpha, if the stock were to pull back, there are technical support levels around $301 and $277. However, with the current momentum in the stock trading near all-time highs, the trend direction remains firmly upward. So what should you be watching for in the week ahead? Earnings season is approaching. While Alphabet's specific earnings date is scheduled for February 4th, the market will start positioning for the release next week. Investors will be looking for any early signals regarding search volume and cloud growth. Tesla's earnings report. Pay attention to Tesla's earnings report on January 28th. Given the heated competition in the robotaxi space discussed earlier, any concrete announcements from Tesla regarding their Cybercab or regulatory approvals could impact sentiment for Waymo and, by extension, Alphabet. Legal developments. With the consumer antitrust suit moving forward, keep an eye out for any further procedural updates or settlements, though these legal battles typically play out over months and years. To wrap up, here are the key takeaways for Alphabet this week. Bullish analyst calls. Raymond James set a street-high price target of $400, driving positive sentiment. Waymo growth. The autonomous driving unit has expanded to Miami and opened its waitlist, signaling confidence in its Level 4 technology. Strategic AI moves. New investments in Japan's Sakana AI and a licensing deal with Hume AI show Google is aggressively filling gaps in its technology stack. Legal headwinds. A federal judge has allowed a consumer class action lawsuit against Google regarding search defaults to move forward, keeping regulatory risk in the picture. That's it for this week's edition of TickerWatch News for Alphabet. If you found this update helpful, please consider subscribing to the feed and leaving a review. It really helps others find the show. Thanks for listening, and we'll catch you in the next episode.